So we've heard of the fiscal cliff, but what about a fiscal wall for junior mining? Joining me now is Brent Cook of Exploration Insights. Brent, thank you so much for being with me at the San Francisco Hard Asset Show.
It's great to see you in San Francisco this time.
Absolutely. So Brent, let's talk a little bit about this catchphrase you've coined, so kudos for that. Fiscal wall.
Yeah, the fiscal wall. Basically what's happening in the junior sector is we've got something in the order of 70% of the listed junior explorers have got less than 1 year's working capital to get by, many of them less than that, and they're trading for under 20 cents a share. So what we're going to see happen here is they're just going to hit a wall where they've got no money, can't raise money, and it's going to go away. They're toast, basically, in my opinion anyway.
Okay, so they have what kind of a timeline to raise this money, Brent?
Well, most of the companies I talk to now, the story is we're going to raise money in the first of the year when the markets improve. There's a long line of companies that are going to be raising money at the first of the year when the market improves. I'm not convinced it's going to improve, and I'm certainly not convinced it's going to improve for the highest risk sector, these juniors that really don't have much except a story.
So do you think come next year this time we might see a lot less juniors because of this?
I think we'll see a lot less juniors. We'll certainly see a lot more consolidated juniors, companies that have rolled back and tried to finance again at whatever 10, 20 cents. So we're going to see a lot of that happening. There's really too many companies out there. There's just too many companies out there with the money gets spread too thin. We need to concentrate what money there is left in this sector, the investing money, into the companies that can survive based on they've got a good management, good project, and know what they're doing.
So Brent, let me ask you, what are some of the challenges these juniors face in raising the capital? Is it because there's too many of them that there's just not enough money to go around?
Yeah, there's not enough money to come around. We had the funds come in 2009, 2010. They're all exiting. They thought it was an easy thing to make money in, and they get in there, and these stocks have just collapsed. They're illiquid. And so I don't see really where the new infusion of money is going to come in. I think longer term, this is a great time to be looking at investing in this sector, but you've got to do it with a bit of patience until we see risk appetite improve, and I don't think that happens until we see the U.S. market and economy improve. It's a tough time to raise money for anyone that's trying to raise money on an idea.
So Brent, on that note, what sorts of things are you looking at?
I'm being very specific. I think what you want to do in this market is identify a company who's got an asset of value that you can really put a value on that's selling at that or less than that value, and there's a number of them with some upside. My main concern now is if I can cover my downside, then I can look to my upside. But these just drill hole play companies, and we've got a couple in the portfolio, if they're not successful in pulling a significant intersection, as potential discovery, it's going to get tough. They got to go raise money at lower and lower prices. This is not a good situation for them. So cover your base. Know what you're buying. Buy something of value, below value, with upside. Well,
Australia's natural resource minister a few months ago was saying how the mining industry in Australia is really going to hit a wall. So you think that the same thing might happen here in Canada then?
It's happening.
It's happening.
And to the majors as well. The majors are hitting a wall. The CPM group, I think it was, just put out a report a month ago maybe. Anyway, it looks to like in order to keep up with current gold production, about 80 million ounces, over the next 10 years, they're going to have to spend $400 billion just to replace what they're mining.
Right.
And that's tough to do.
So do you stay away from the mining stocks now?
I'm not big on, I don't really invest in the mining stocks personally. I look for more development stage projects. What my real thesis, besides buy value, is to buy something that's high enough margin that a major company will buy it from me. I'm always looking, when I buy a stock, I want to sell it to someone smarter than me.
But that's so hard to come by, Brent.
No, it's easy.
Thanks so much for your thoughts.
Thank you.
Thanks for watching our coverage from the San Francisco Hard Asset Show. We'll have more for you on Kitco.com. In the meantime, you can email me at newsfeedback@kitco.com or tweet me at Daniela Cambone. Thanks for watching.